Yeah. How you guys doing? Give me a thumbs up in the chat if you're live. I know, we have really high standards. All right, let me know what currency pair or futures contract or stock indice that you want me to cover the most. What's your number one thing today? Gold! All right, I guess we'll go. Now's a good enough time as any. So welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Why would we want to do that? Well, I got to find the software to switch the... There we go. Why would we want to do that? Because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. So it looks like you guys want to do Aussie. You want to do gold, pound Swissy, USD CAD, gold, Swissy, Bitcoin, SP 500. Gotcha. Yeah, I see you. Cool. So anywho, we'll do that and more. Whatever you want. It's good by me. Let me take you through the value ladder of our relationship. You want to start your trading relationship or trading business, let's say, your trading business. You need to start with a service provider that actually provides you service. One that exists and get compensated for providing you the service that you seek. In this case, you need to be able to put your trade into a pool of liquidity providers. Most Forex brokers are basically dark pools, which means they never actually execute your trade. You take a trade, they match it against another client, and eventually over time, both client, you lose all your money because you're not very good, and then they lose money because they're not very good. The broker knows that. The broker's happy with all of that. And, what happens is all those deposits, they just keep. Because eventually you blow up your account, the other guy blows up the account, and then you leave, they leave, and, the broker just keeps the money. So it never actually goes into the interbanking system. That's how most brokers work. So if you don't like that, if you'd rather be matched against liquidity partners like JP Morgan or Goldman Sachs or that kind of stuff around the world, that's what Traders Way does. So you say, sell euro dollar, and then it matches you to somebody inside a liquidity pool that is actually the interbanking system. That's what an ECN does. I recommend them. That should be the basis of your that is the base of your trading business. Okay, so you got to get that in order right off the bat. Back when I was a venture capitalist, it was having the right corporate structure, so having an attorney that actually knows what they're talking about when it comes to high-tech startups and getting your cap table set up, to get your legal documents set up, and then bringing in your first investors and having that structured properly. So you have the right people placing the right valuations and all that kind of stuff. Like, if you screw up the corporate structure, no one will ever want to invest. So the base here is you got to have real access to the interbanking system. And that's what Traders Way does. So you got to get that. The second thing is you're going to need education so you know what to do. I promise you this is the world's greatest educational website when it comes to trading and investing. It's $88 a year. It's worth $888. It's actually worth more than that. No joke. I mean, I really should say this is $2,000, but it's on sale for $88. I mean, seriously. Now you have a good basis for making trading and investing decisions. You have the right platform. Now you have the right process. And then you want to start getting big and scale up as a business. And in this case, what I mean by that is making better decisions, informed decisions. You have a research tool, okay? So that your opinion is based on information like this. Why do you want to sell the S&P 500? Well, because I'm watching the technical trend. Because I'm watching GDP, because I'm watching inflation, because I'm watching jobs, I'm watching interest rates, I'm watching institutional positioning, I'm watching retail positioning, I'm watching seasonality over 5 and 10 years to make my informed decision. Okay? So now you make better decisions, institutional style decisions, not based on your gut, but based on true global macroeconomics. Now, QuantBox automates all of this for you. Okay? So you can get to an organized fashion of trading like this. These are the things you're interested in buying. Down low are the things you're interested in selling. Everything in the middle you're basically ignoring. Okay, and you have a real process of making informed, logical, intelligent decisions before you even look at a chart. And then the next thing you want to add is a process of doing technical analysis properly. Now, you can watch 7,500 charts in real time, or you can have a machine do it, and then organize it and so that you're trying to match up this, okay, so CAD yen, and this is old obviously, but CAD yen strong buy. So now what would you do if you saw a CAD yen trade setup that was bullish? See, it's doing fantastic, amazing, outstanding, perfect technical analysis. It's looking for patterns with very precise rules. It's very, very, very good. Now, if suddenly you saw a pound yen long on a 1 hour chart and you're already, sorry, I said pound yen, CAD yen long on a 1 hour chart and you're already fundamentally interested in buying it, then that is actually really happening. There's really a pattern on that lines up with you fundamentally. That's how you use this. And so now you have a business where when you press the button, you go into the same global pool as Goldman Sachs. You know how to set up trades. You know, you have an education, a level of knowledge, right? And then you have really good tools fundamentally and really good tools technically. You're the complete package, my friend. You are the complete package. So at Investor Bootcamp today, right, in our live trading groups, we are meeting as a community. And we are going to download and review the actual economic reports and actually read them and have a conversation about the importance. And very often I'm pulling out very specific sentences, not just numbers like, oh, look, GDP was 1.9, but because I have a degree in economics, sometimes I spot things that these economists are writing about, and it has an important meaning or history behind it, and you would only know it if you're, well, a classically trained economist, and I just happen to be one of those. So cool. So now I work for you. So think about it. You have coaches, right? You have coaches and consultants. You have a quantitative analyst and you have a technical analyst all working for you, and you're making decisions and executing trades into the global market like a true professional hedge fund. I'm talking about like $1 million worth of value that just costs you, combined a few $100s a month. It's extraordinarily cheap now to be a professional institutional investor in the world of Forex and finance. Incredible. Just absolutely extraordinarily incredible. And do I think you need all of them? Yes. Yes, I do. Okay, so again, let's take a look at how you feel about today. And, thank you for participating in the poll, by the way. I appreciate that. And yes, 61% are risk on right now. I realize that because, well, we've had 3 days of risk on. What is behind that is things like changes in GDP, changes in jobs. So I suppose, and I guess I just already have killed the page. But let me bring a page back up. Like if you go into QuantBox, for example, boom, 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 boom. And again, it's not a website, it's a database. So this is all being dynamically created from data. Hundreds of thousands of tables to make these calculations. But like, like if we go back to that chart we looked at earlier today, global stock indices. And hang on, what the heck is going on? Let me make sure this isn't like a kid in distress or something. No. Okay. Okay, so if I zoom in a bit, like, for example, inflation in the United States is rising, okay, but GDP is falling, okay, unemployment is rising, interest rates are flat, and we're using this information to make decisions. Now, sometimes we are comparing multiple economies. So now we have to take that data and say, how do these two compare? And now it's comparative analysis. Okay, here's what's the 20-year average. Here's the technical analysis. Here's the fundamental scoring. Here's the retail positioning. Here's the institutional positioning, so on and so forth. Okay, so anyways, I cover that every day. And then you get to decisions. Now, I'm a little bit of an outlier on this, and maybe I can bring it back up. Let's just bring it back up. If I look at close that, close that, close that. If I look at oil, okay, I actually want oil to go up, but QuantBox is neutral. So I'm actually sitting and waiting. And the cool thing is QuantBox is helping me wait with patience. Now, I was trying to capture a potential return of risk premium in regards to the tensions in the Middle East, specifically Rafah. Okay. And or maybe central banks start cutting interest rates to spur their economy, which would increase demand. So one's a risk premium, one's sort of a demand issue. And I'm interested in buying this sucker, but QuantBox says be skeptical. So it's prevented me from just blindly buying. Now, using technical analysis, and I know I got a lot of things going on here. I mean, maybe I can just clean this up. Let's just say, let's do it this way. I can go template, position trading, bullish. Okay, and I'm way out in no man's land. But you can see in the past, this was consolidation. So I wonder if that can end up being supportive. Okay, if I change my template and I just go to normal monthly pivot points, I can also see that we have completed a pattern. Not one that TRADARS does, but one that I do. And the pattern here is M3 to M1. And if you hit that number early in the period, in this case in the month, then very often, not always, but very often, we return back to the central pivot. But QuantBox says, be careful, bro, okay, because there's a lot of reason for it to be down. So now, instead of just buying it blindly because it's an M1, I'm taking into consideration the macroeconomic reality as well. And I'm like, well, if I was going to buy it, I need this to be respected, and I need to start seeing higher highs and higher lows. And I've been sitting here now for 48 hours and haven't got one. Okay? Now, XMX pops out some news, which is a possibility, sure, but I don't have it yet. Okay? So I'm sitting here and I don't have a higher high. So I sit and I wait. And if I'm wrong, this just keeps falling. And if I'm right, I'll be earlier in the move and be able to maybe build a position. But right now, I am very, very quickly not losing money. And that's how you do it. Cool. So I might buy it, but I am waiting. Now, a lot of you were interested in gold, and I already planned this out for you. I talked about it on Monday. I talked about it on Sunday. I talked about it on Friday. So you're either on the clue train or you're not. I have a purple zone, which represents the role reversal. I have a green zone which represents bullish buying zone. It can't be more obvious. Bullish buying zone. And the target for today is up into here. 2350 to 2355. So you're either done it or doing it, or you're not on the clue train. Okay? So in a smaller time frame, what do you think about that as a potential role reversal? So now I might say, oh, somewhere in here. And my tactical trading plan, okay, could be like this. Okay. Now, at 6:30 in the morning, I hit people pretty hard who are members of QuantBox. And I said, this is the right time to be trading gold if you trade gold. I said, don't just sit around waiting for stuff to happen and then find yourself 10:30 in the morning and you're finally making your first trade. I mean, dude, couldn't be any slower. So I said, in this period is when I like to trade gold, and I'm front running the market. And so by, 9:45, I'm usually taking profit. Okay? And you can see we were at 23.10 in a buy zone. And remember this purple area, you can see it here, is the role reversal. Okay? So all you had to do was buy it at the right time of day, which was down in here. And so maybe we'll get a little follow through. Oh, wouldn't that be nice? Okay? And maybe we will go to 2350. But you shouldn't just be starting the process now, is my point. You should almost be completing the buying process, and later today or tomorrow, start hitting some targets. Okay? Or this fails and it drops like a ton of bricks today. All right, good. Well, that's why you want to be at the right time of day. At Investor Boot Camp, we spend a lot of time talking about time of day. In particular, market opens. Well, that's a market open play on XAU. Now we can look at a different metal. And here's XAG, aka silver. Okay. And it's trying to figure out its direction now, huh? I'll move my stop a little closer. Okay. And if we continue making higher highs, this will work out just fine. If it's going to collapse on me, I'll lose a little bit of money, and that's fine. Okay. Now I should be in here. This is an Asia trade. But really, the next thing I'm eyeballing is really tomorrow's trade. I mean, I could have my stop here if I have conviction. You know? Man, my phone is just blowing up. I'm on fire. Who is pinging me? Oh, I'm collecting dividends. All those beeps are me collecting dividends. Sweet. I like money. And the stock market is opening in 1 minute. Very cool. Look at that monster move, huh? The Monster Mash. Platinum is moving bullish. So is copper, so is silver, so is gold. Okay, that's what you do with persistent inflation. And I've been screaming bloody murder about this for months now. Maybe a year. In a situation, and in particular if you're a believer in stagflation, okay, then you don't want to invest into financial assets. You want to invest into real assets. And so, you know, metals and food like wheat and corn and, you know, such tend to do very well in those situations. Okay? So maybe platinum becoming a little more bullish. Grind, that has to do with meta quotes. That has nothing to do with Trader's Way. So hold your horses, my friend. Okay, that has nothing to do with Trader's Way. All right. Yeah. Yeah, well, whatever to you. Gee whiz, Grind. How about this? When I was building tools to support you guys using the MetaTrader platform, I was selling them for like $5, right? MetaTrader's lawyers, MetaQuote's lawyers contacted me with the threat of suing me. They were in the process of filing lawsuits against me for making tools for you to use their platform. So that's when I lost respect for them. And so, hey man, if they're pulling the plug on all U.S. clients, it has nothing to do with Trader's Way, bro. So get your facts straight. All right. XAU, there's the little rolly. Be careful. So we did some commodities. You guys want to do some Bitcoin. Okay, I'm just showing you how elevated we are. We went well above the annual target. Okay, and notice how we found support right on another annual pivot. It's kind of interesting. We still have, on the medium term, okay, downward pressure, but that might change. So according to the trend, our next stop is 50,000 or 51, or we breach and we head the other way. You see what I mean? Okay. Oh, I have offshore companies, FX, surveillance. In fact, I'm interested in selling my Hong Kong business. If anybody wants a seasoned company, it's probably pretty close to 20 years old now. Okay. Okay. Grind, it seems like you've been a loyal follower for a long time, but it seems like you're coming out with guns drawn. Why are you looking for a fight? It doesn't seem like you. You must be very upset. Try Ethereum. Go back out a little further. Where does QuantBox get its data? From the central banks like the Fed, and from private and other government databases. Okay. So that's the best place to get them. The data sources, right? The data sets. I'm trying to grab that. It's not going to grab. So, this isn't bullish yet. We need a couple of weeks, it seems, before this would come bullish. Okay. Like this. We got some time, right? What else? So there's some crypto, like if I pull up Bitcoin on my other that we've analyzed in the past, I've done the same process. Like, it's still trending down, but this is a very interesting price to find the support. This price, 57,287, we had on January 1st. Okay? Okay. Now, Sky Killer says that Sky Killer wants to be risk on, but being in May, I'm kind of not confident. I love buying in May. I've always said that. Right? So, that's again, QuantBox helps you double check. Okay. Oh yeah, after the drop. Yeah, maybe. So like we can look at like S&P 500 maybe. And April was definitely a down month. And it's very unusual. See, that's what I want you to realize. That with the right tools, you know how unusual that this drop was compared to the 20-year average and the 5-year average. This gray line is this year. So we might be in a build-up reaccumulation phase until July. Yeah, but you're using a lot of maybes. Okay? So the year normally looks like this. Okay? Oh, sure, and it's in yellow. Hang on, I wanted black. Okay, down, up, down, up. Now, I explained in January how this was going to be different this year. And I believe in January I said something more like up. I think I had down and then sort of something like that. Okay. But nonetheless, instead of the maybe Sky Killer, you say, well, from this period, from the end of March till July, you buy dips. That's all. There's no like maybe. Okay? You have a strategic decision, and then from there you use your charts. So let's say that was the decision-making process. We open up the S&P 500. Okay. Then we get in a scenario. Let's back all this out. Let's just clear this up. Let's just put on a confluence. It's time. Okay. So buying dip scenario, gets you in a situation like this. I find this one a very difficult one, but this, and then if there's another one, this, and then if there's another one, this, and you have the confidence to maintain that. Like, okay, sure, it might wimp out here. Yes, it might. But knowing what's normal, in fact, 20-year average should keep you focused on not might, but probably. Okay? Now, notice the collapse here. Okay, so typically by the end of March, I'm accumulating. Well, these things, it moved faster than normal or earlier. But that is expected in the fourth year of a political cycle. But let's just say there was some up and then a little bit of consolidation, then up, right? You can probably call that some consolidation, and then up. Okay. And then what? This is the screaming bloody murder part. Okay? That doesn't belong. That's the scream, get out. Well, you can see I sold there. I'm showing you how to hedge. So when I sold there, I explained, well, I'm actually long the S&P 500, but as an institutional investor, you want to hedge on the way down. So I showed you that that drop in pink is crazy important. Okay? And then if you don't see or notice that, you may not be doing technical analysis properly. Your old guru was wrong. Okay? So anyways, then we get this move. But remember, you can still be a bull. Okay? But then suddenly we are in a new period. Higher high, higher low. 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 Okay? And you should stay with the bigger picture. So, yes, April was down. But it's something like, I think there's like 3 examples in the last 20 years or something that the S&P 500 was down 6% in April. It's usually up. So you have to understand, like, this is freakazoid. But if you maintain your research, let's say, then you should still be into the possibility. We don't know if this is the future, but in the long run, and maybe it'll only have moderate effects this year, but if you behave the same way next year, and you behave the same way the year after, and you behave the same way the year after that, so now we're on our way to 2030, more often than not, you'll probably get it right. But you need to be consistent when the market's inconsistent. So we got a Fed issue and we got an election issue. Yeah. But we knew that in January. So it's more like get your strategy set and you can like, okay, that's an up channel. Then the channel broke. And then we created a new up channel. Stay with the up channel until it breaks. It's not that hard. Okay? So I don't want to hear the maybe. I want to hear I'm buying dips. Is this a dip? No. Okay? Okay? You see? I think and I don't know if this is you, Sky Killer, but many people are making decisions on very small time frames, and they're using very tight price action, and they miss the whole trend idea, and they get slaughtered here, and then they get slaughtered here, and then it doesn't pull back enough, and then and then they get in late, and then get slaughtered here, and it's just really, really sloppy. If you get this right, I know there's a lot of pivots here, so I guess I'll go smaller time frame. If you get the direction right, the rest of the trading is significantly easier. Is that right, big fella? Let me make a change here. All right, that might do it. Or you know what? I'll put that back, but I'll change this over here. Hang on, let me do that. Okay, it's at 80% now. Maybe that's a little better. Okay, so I want you to get the strategy correct first. Okay. Awesome, big fella. Frank says it's easier to trade with big money. Well, or trade it differently. I mean, I don't know what big money is, but like I own the S&P 500 and I'll continue to own it for 25 years. So even my process is a little different, right? Okay, but like I see a candle here. Okay, that's a buy inside that wick. Because I can see we made a higher high, and you should expect a higher low. Very basic price action. And then you can see the day trade there. Yeah. Even if you miss these lower ones, I mean, so whatever. I implore. Okay, I beg of you to have a fundamental bias and use higher time frames, even a 4-hour or daily. I love switching back and forth. 4-hour daily, 4-hour daily, 4-hour daily. Okay. Just clean some of these up. Now we'll see if we get a little risk on today on these yens. It seems like they could. Don't really know. Okay. So I'm long here. I'm not making much money. But do you know why? Let's check this out. Let me change this. Template. Daily bullish. Okay. And actually, the interesting thing about this is it changed by the time I made it. Or maybe it was a follow-up trade. Maybe it was this one I started with. Yeah, it was this one. Okay. So many hours in advance. In fact, almost 24, right? Well, maybe more like 18. Like 18 hours in advance. I said to the world, I'm interested in buying this asset around here. Okay. And we probably were here when I made the decision, or here. Okay. Probably more like the second one. Okay. With this basic idea of buy low. Now, it didn't happen exactly the way I thought, but it happened. And so now I'm long on a monthly central pivot point, daily central pivot point. Okay. Okay, riding the 4-hour 21. What do you think? Now, I don't see why this one, I had an OCO on this, so I'll do it again. I don't know why it failed. Okay, I had a 150 500 on this. Maybe that's what it was, the 150 so low. No, that's about right. Cool. Okay. Well, Favor says I only use weekly and daily. Okay, that's fine. I don't use weekly because I find that it doesn't incorporate any fundamentals. The fundamentals change. Daily and 4-hour are what I like to do with strategy. So again, think of my book, Strategic and Tactical Forex Trading. So I always start with strategy, and for me, a 4-hour and daily, that's all I need. Weekly, it's too far out, but often people say, well, in 2009 this was resistance. I'm like, yeah, whatever. It doesn't tell you what the central bank policy is about to change, that kind of stuff. So I'm like, yeah, whatever. So I stick to the daily 4-hour. And then, and of course, fundamental. Okay, cool. And I make a decision. I want to buy Aussie dollar. I told you I wanted to buy Aussie dollar when it was falling. This is just, again, another example because most people just sit and watch it. So I'm like, okay, well, I'll give an example of trying to get into this trade. Okay, great. Fine. But once I made a strategic decision, that's where I drop into a 15-minute or a 5-minute. Okay? And I'm not using monthly or annual pivots. I'm using daily pivots. So you can see on a small time frame, even though this was going up at the moment, I said, okay, you're going to fall down to here. And even though it's falling, I'm a bull, so I'm going to buy it. That's all. Frank says, "What's my thoughts on the RBA?" I will be covering that today at 4 p.m. at Investor Bootcamp. We will download and actually read the policy statement. Man, my phone is just going crazy today. Oh, that's QuantBox just emailed me some advice. Euro dollar 7 to 10. Why? Yeah, all right. All right. So Europe is catching a bid, maybe? Let's take a look. You are the one, only you beneath the moon and under the sun. Do 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 do. Euro dollar. Okay, so QuantBox going bullish on us. Seems like my plan is relatively okay. Okay, you see what I was teaching? Okay, higher high, buy the dip, roll reversal. And then that should produce a new higher high. So that's the strategy. Okay? That's what you need to do. That's right, Andrew, and I actually covered that in a meeting. Must have been a swing trading meeting. I covered that maybe a month ago, and it was more of the question had to do with more of the process. What process? Like, how do I use QuantBox and TRADARS together? And that was one of the tools in answering that question. Man, I got a bunch of crap on here still, huh? I don't remember what it's called. I thought it was something checklist. Maybe not. Oops. Yeah, I guess I don't have it on this platform. I did it on the other one. Unless I'm just not seeing it. I have stubborn eyes. No. None of this stuff. No. Don't even know what half of this stuff is. Swing trade checklist. Yeah, but I might have made that. That sounds like a template that would have this indicator, and I don't think I have the indicator, but yeah, strategy checklist. I'll do it on a different one. Oh, it is there. And then you can alter your checklist, right? Yeah, this one's a little buggy. A little buggy. Oh, that FXTT. It would probably was there. So you can update these. So you can have like a quant box straight, right? Cool. You know, something like that. I don't know. And then you can have a very long checklist if you want to make a process a little more detailed. So you can do, so what is this, Kiwi dollar, right? So Oops, I have a different iteration. All right, so we can say, oops, dollar pairs, Kiwi dollar. And it's only got a -2. Okay, so I've reviewed it, and then you want to write it down. Okay, so now I got that set. I can go through the process. Well, if I'm neutral, I don't want to buy dips or sell rips, so I'm just out. You see, but I want you to have a regimen, a process. And so Andrew does something like this. Yeah. Doesn't look amazing, does it? Yeah. Cool. A little bit of focus on process today. It's interesting where you guys take me on this journey. Thank you for being the lead. So I'm going to do a summer school. Yeah. I'm going to do a summer school this year. So leave some time on your calendar for that. So even while you're on the beach. No, it's actually going to be on scalping and summer trading, like, you know, how to trade without a trend. And so it's going to focus on like high volatility, event-driven strategies and all that, centered on using tools like TRADARS. Okay. So consider it like scalping and day trading or intraday trading, like short-term trades. It may not make any macroeconomic sense, but it's what's happening right now. So, you know, swing trading and position trading with macroeconomics, very often that's like farming, right? No, this is about hunting and killing some meat today. So anybody here interested in being a hunter this summer? Refine your skills on the short term? Market opens, new scalping, day trading. Cool. I guess there'll be 3 or 4 of us. Really? That's it? No one else interested, huh? All right. Well, maybe we won't do it if it's only 3 or 4 people. I have a lot of stuff to do on my endowments. I'm auditing the endowments. Okay. Cool. Favor, I have no idea what you just said. Yeah. Yeah. Come on, you lurkers. Yeah, all right. Well, Papa Bear's got to go. If you're in my swing trading group or my day trading group at Investor Bootcamp, we meet at 4 o'clock to actually download and read the economic reports and have discussion around that. And if you're not like in these groups, consider it like the swing trading group is $99 a month. That can't be too much. That can't be holding you back. Surely. You should seriously consider joining these groups. They're good people. They're good conversation. There are opportunities to, see your trading and investing world from a different lens. And this one is fundamentals. Although on Thursdays, which is included at that $99, we do technical analysis. So you get some fundamentals, you get some technicals, you can ask questions. It's like having me as a consultant. For $99 a month, we meet, what is that, 8 to 10 times a month? I mean, that can't be too much money. It can't, right? So anyways, seriously consider joining the community. Peace on earth. May the pips be with you. May your profits be above average. Please have a wonderful day, and I'll see you at 4 here at Romper Room. Yeah, you must be a Romper Room fan, right? Bend, stretch, reach for the stars. Here comes Jupiter, there goes Mars. Bend, stretch, reach for the sky. Stand on tippy toes.